So we definitely have a lot of just insane stuff happening to Workhorse Group Stock again, actually being down almost 47%. However, since the recent jumps of more than 123% up to nearly $19, while happening as a form of recovery from the pullbacks after spiking the astonishing 7,800% at the beginning of the year. And as the new second quarter earnings also got released just about a week ago, what we are going to do today is give you an updated insight into what is actually happening to Workhorse Group Stock and the just released earnings report, as well as break down exactly whether it is still a buy at the end. And as the analysis in the video is as always crucial to consider before buying the stock, make sure to stay tuned. Before we jump right in, however, just hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button. It's free, and you can always unsubscribe if you feel so. Alright, let's start talking about the stock. And as its popularity, especially amongst investors, literally skyrocketed together with the share price just a few months ago, it's no secret that we are looking at a pretty revolutionary electric delivery car manufacturer in the US. It truly differentiates itself from its competition, however, by producing only 100% electric vans with a ton of extra features built in, allowing for notably higher cargo space as well as, for example, some super advanced tracking features. So although we broke this down way more detailed in the last video, let's quickly go through one of the still most important factors that strongly influences the price of the stock right now, before we get more in depth into some crucial activities currently happening to the company, which is of course the recently released second quarter earnings report. And comparing the new released numbers on a year-over-year basis, we can actually see some huge improvements in almost every sector of the company, beginning with an insane 1,300% increase just in sales of the now already 14 trucks that got delivered. These then brought in a total of $1.3 million, a huge gain when compared to the literally just one truck that got delivered last year that brought in only $92,000. Nevertheless, the company is still not profitable, being able to reduce its net loss by more than 50% however as well. In regard to the stock's performance, however, and this is crucial to consider for our prediction at the end, we've seen some consistent pullbacks since the recent highs. And although it certainly wasn't the only EV company pulling back at the time, considering this and the lost contract to OSHKOSH defense, the massive 130% the stock still experienced can mainly be attributed to one super important reason: some tremendous hype from especially retail traders. And because the company has been widely discussed on forums such as Wall Street's and in videos like this one, a ton of people bought in, while causing shorts to cover their position, leading the price to gap up massively to the recent highs. But such a short squeeze mainly comes down to only one factor: short interest, which has also risen significantly again as the stock is continuing to pull back, making a new short squeeze very likely again. And while we've still seen some significant gains even in the declining price as well as the mentioned earnings compared to last year, the most important thing for Workhorse right now is new orders, which are still rather modest, especially given the company's tiny size. But it's exactly this relatively small size that may also present a one-of-a-kind opportunity to profit from the electric car industry's long-term growth without needing to invest in some overbought stocks. Furthermore, as e-commerce continues to expand at a super fast pace, the following surge in logistics and distribution makes profiting of exactly this via an EV manufacturer a pretty solid and future-proof choice. If you're looking to buy for the short term though, you should be aware of the stock's current volatility. However, given Workhorse's continued rapid growth, as shown by the company's recent second quarter earnings report, this shouldn't be too much of a concern. Furthermore, if the tremendous hype from retail traders continues and short interest continues to rise, another short squeeze is not as unlikely as it may appear. Alright, with that being it, make sure to get your 2 entirely free stocks with the link in the description, with the first one literally without any deposit whatsoever, and the second valued up to $2,000 for depositing even just a few cents. And if you like this video and want to support our mission of providing free financial information here on YouTube, please ensure you're subscribed and definitely consider leaving a like. Thanks a lot, and see you next time.